How fake money destroys the economy while making the rich even richer. A bizarre economic event is coming that turns everything upside down. As Patrick Bet-David calls it, the reverse market crash. When stocks unexpectedly blast off into outer space even as the economy sinks, regular folks lose everything while the wealthy expand empires. Before we continue, quickly hit that subscribe button and let's move on. Picture waking up to discover the Dow inexplicably jumped 1,000 points overnight, although companies struggle. Stocks then enter the twilight zone, rising 25% weekly despite zero improvements on Main Street. Prices insanely detach from business reality. I refer to this nightmare scenario as an inverted market crash. Investors get hypnotized into a frenzy chasing phantom returns that repeatedly vanish upon contact. The end result? Joe Sixpack sells the family farm at the peak trying to strike it rich, while billionaire Mr. Monopoly quietly dumps shares minutes before the meltdown, then buys distressed assets for pennies on the dollar. This concept likely causes heads to spin. Let me explain exactly how it happens using real examples already seen across the globe. You see, the US isn't immune to this market perversion. It has triggered total chaos everywhere before. First, consider how efficiently the US already funnels wealth to a tiny group up top. Back in the early 80s, 60% of all riches sat with the top income bracket. Today, it's a staggering 79%. They've vacuumed up all gains the past 40 years. Everyone else receives leftover crumbs, with middle-class wealth hacked nearly in half, and the imbalance deepens annually. This warped dynamic guarantees eruptions. But didn't politicians promise to stop this unhealthy trajectory? To resurrect America's middle class? Turns out, whenever officials print trillions pretending to help average folks by mailing stimulus checks, here's what happens. Poor people just end up buying more iPhones, Nikes, and Toyotas, stuff made by companies owned by, wait for it, rich shareholders. So the free cash inflates corporate profits and stocks instead of actually helping ordinary Americans get ahead. Printed money simply concentrates wealth at the top, and perpetual currency creation breeds conditions allowing markets to go bananas. With all this counterfeit cash flooding the system, it gushes into investment rather than paychecks. Thus, assets inflate like bubbles. Stocks disconnect from business reality, soaring while sales and profits lag. The danger flashes when little guys rush in late, after valuations exceed nosebleed levels. The wealthy quietly bail out at peaks before the euphoria pops. Then the curtain drops and wipes out recent suckers. To fully appreciate how severely events can invert, let's peek into some crazy markets abroad already flattened by this dynamic. Our first stop, Weimar, Germany, 100 years ago. Back then, you could exchange 4 marks for a US dollar. No big deal, but fast forward less than a decade, and suddenly you need over 1 trillion marks to buy a single buck. Total insanity. How does this madness happen? Well, Germany was saddled with oppressive World War I reparation payments demands after defeat. With limited options available, the government fired up currency printing presses white-hot to raise funding. Predictably, prices went postal as money supply ballooned while goods plunged due to factory damage. By 1922, hyperinflation ravaged the country. Prices rose an insane 700% yearly. It got so bad, folks required wheelbarrows overflowing with worthless paper just to buy daily bread. When inflation eviscerates purchasing power so extremely, panic sets in. Society breaks down. Yet, the barons and businessmen maintained status quo by holding assets and monopoly shares largely unaffected by currency chaos since scarcity boosted valuations. While middle-class savings vanished to nothing, the elite watched corporate stocks surge astronomically, even as local consumer economics collapsed. Zimbabwe tells a similar gut-wrenching tale more recently. Once considered southern Africa's breadbasket, years of government mismanagement gutted the heart of the country, its agricultural sector. As farm output cratered, authorities ran printing presses to import grain. But using freshly minted currency to buy imports faster than producing goods at home sparked rapid inflation. Officials then printed more money to raise civil service pensions and salaries, hoping to soften public unrest. Do you see the vicious cycle take hold? Fixing problems just exacerbated them. Faith in authorities evaporated. Eventually, monthly inflation measured 79 billion%. No exaggeration. As money became worthless practically overnight, $2 million no longer purchased bread. Yet even as regular citizens starved massively, the Zimbabwe stock market went vertical, multiplying an astonishing 700-fold at the height of this currency inferno. Do you see the twisted pattern now? Savage inflation decimates public wealth while catapulting equities into warped dimensions. The key ingredients enabling this funhouse mirror effect involve: number 1, reckless currency printing without matching production, and number 2, policies that discourage normal commerce. When money gets magically summoned from thin air instead of earned from sweat and toil, strange things happen. New currency chases too few goods and services, generating huge distortions like asset bubbles. As stocks lift off higher despite weak corporate results, the public swarms in hoping to profit from the casino, only to lose big when the house of cards folds. Could something so crazy ever happen here? Well, the US displays several disturbing parallels lately. Profligate politicians addicted to spending trillions more than America earns in taxes, and central bankers are too willing to pay the tab. By digitizing fantasy dollars they create instantly with a few keystrokes. Furthermore, the great USD expansion now exceeds any peacetime money creation in history, including the chaotic 1970s by insane degrees, with nearly $5 trillion conjured from thin air in just 2 years. Make no mistake, these voodoo monetary spells cast upon markets always exact consequences down the road. Gravity cannot get nullified forever when fundamentals decay. To be clear, I passionately hope we avoid more unnecessary hardship since too many good folks already barely hang on. But ignoring real risks won't make them disappear either. Look around. Wealth gaps intensify from asset inflation, not income gains. Wall Street highs contrast Main Street lows. Can wages realistically rise 25% annually? Never. Yet stocks often do when seismic issuance uplifts markets. But these disproportionate returns, stealing from one group to benefit another, eventually incite societal fury. Imbalances get addressed either voluntarily or by force. So, choose financial actions carefully going forward, knowing paper wealth can prove fleeting as underlying conditions shift. Don't assume the powers that be have your best interests at heart either. True prosperity blossoms from strong communities, not abstract coins. This global shell game enriches very few at the top for long. The wise instead cultivate resilience close to home. The future remains uncertain as always, but dangers and opportunities exist for those responding prudently. With clear eyes, calm minds, and open hearts, we can navigate whatever challenges emerge ahead. Onward, my friends, have an outstanding week. In the end, please support us by subscribing to the channel, it would be of great help. And please hit like and share this video to spread more knowledge across the community. This was Econisance. We'll meet again soon.